Hello friends, welcome back. In this quick demo, we are going to showcase the use of the 369 pinning effect of the value rotation. So this is the daily dashboard for WAVE59. If you want to win 18 days out of 22 rest of your life, this is the dashboard, and these levels are dynamically generated from the market as well as the natural sciences. Trend lines are really good. The third touch is really prominent, as you see here on the 65-minute chart, and we have a contract rotation oscillator, which is telling us that the short is going to be most likely a winner. And then we have 15-minute chart, which has the dynamic price energy levels, where market is just going to jump between these levels, and then they're just like magnets. And on the oscillation side, we have balance imbalance, which is telling us, based on the input controlled, how many number of bars we are going to use to generate the profiling of that number of bars, and how far have we moved from that profiled number of bars. And if you know market profiling and value profiling, that is the concept we are using here to see how off are you from the point of control. Now, on the right side is the further refinement of this. On the bottom, we have 10-in-1 oscillator, which does all the non-correlated oscillations, and they adjust accordingly because we also have rate of change embedded in this. So what are we trying to do by doing that? We are trying to generate the same shapes irrespective of the amplitude of the move as well as the speed of the move. When you are trying to control the amplitude and frequency for all conditions, so the shapes don't change on this. Rate of change was designed for that, right? If something is moving fast, we make it slow. Something is moving slow, we make it fast, and this is how we are getting same shapes. So the new addition to this family is this 3 o'clock pinning oscillator, which is exclusively designed for intraday. The same thing is also put on here, right? So intraday, I don't mean to say, because it is going to reset itself at 3 o'clock pinned element right here, right? And we can control that pin also, but we like to do it at 3 o'clock, 369 algos reset, and it gives us the ability to understand which direction is going to be taken by the algos. These boxes here, they show up only when the algos are active. And one of the way to use this is, when the algos showed up on the top, let it come down and retest it, right? This is designed to pull back, retest, enter into the system. And we don't really retest, enter blindly. We wait for the break of the bottom or the rally, in the rally phase, break of the top. Why we have 3 boxes here? Because, you know, they take some time to accumulate the contracts. So what has happened here now in this new oscillator, which is this value oscillator, we call that, we are seeing how, just like we have balance imbalance here, dynamically dictated by controlling the number of bars you want to put in place. This is actually using value at price. Okay, value at price, bar to bar, and it is going to be done dynamically on the bar to bar level. And what we have to look at is, when we go to the extreme size, it can stay extreme for a while too, but when we go to the extreme size and we are overlapping with this oscillator, gives us a very good confluence that, hey, highly potential of short is now projected. But it will go from the hourly bars, the bias has already shifted on the downside based on the third touch of the bar itself. And the same oscillator put on here also is saying that, hey, potentially short is coming, and this is telling us short is coming on 15-minute, or contract on 15-minute. Once you catch these big moves, if you're having some still a struggle in your mind to pull the trigger, we can always use, and you should always use, this trend lines, right? Let the trend line flip, especially when this is going sideways. Flip on the other side. Now everything makes sense. It's coming together. I wait for it. The sell stop is right there. Once you catch it, runner is running. All right. Now on the 5-minute chart, as you can just see here, what are we seeing? Now you can see the power of the bottom oscillator, also how it captures the same shapes too. This is value at price. There we go. So it's telling us that, hey, potentially short is coming, this telling short is coming, and then we have algos which are now accumulating contracts. They try to buzz it down, they add more contracts, they're just trying to get ready to move, and they do. And we also have the direction. And here, the both oscillators are telling us value at price has moved extremely on other side of the equation. So what we do, we should start looking on the long side. Okay, let's move on to today. Where are we today? Right here. This is yesterday. So let's do just 3-4 days. That's enough. We don't want to waste too much time. I think there's nothing much to say because we have done all the hard work behind the scenes for you. So you make money. Don't get involved in too many complex quant models and formulas. That's not your job. Your job is to make money. Unless you want to be a quant. There we go. So short was projected here. So let's put a short here, bias. Now we got it. Okay, next. Come this day. This is the screeching short, right? So there we go. So short value is you're getting out of balance. Market is rotating across the balance. If it is going sideways, median rotation, right? We already discussed that in our videos. So here, now you see this is telling us that, hey, we are in this upper extreme zone. That short is good idea. And again, we can also use these algo boxes as an offset to give that opportunity, let the trend build up, right? So at the end of the boxes, at the edges end of the boxes, draw a trend line. You can just see algos came up. You also see that oscillator is telling us that, hey, we are going short, and we can just put a sell stop below the boxes. Stop loss is right there. This is, there you are. The job is to catch the entire day's range. All right, so we got that, and we got that. 3 o'clock came again. Same patterns are showing up every day. It's not telling you the amplitude of move, but it's telling it, hey, look at this. 3 o'clock open, goes there. We are getting ready to take a shot. Let this cross over. Everything came together. You can just see how it is operating properly in this context. And why are we only looking at our shorts? Look at this. We are moving in this short direction. Look at this. We are coming off this hourly basis, and now we are probably going to make some base here. So all these days, 2 days, we captured all this, right? All right. So where are we today? Again, same thing. 3 o'clock pin. We start resetting the algos, and there we are. Again, same thing. Went to the top side. Algos are showing up, right? And here we are. Look at the oscillator on the 15-minute chart. Balance imbalance is going on. Algo boxes are showing up. Now this is where people get confused. Algos are active on every level. When the London opens, they have to activate and move the market, right? So you see that this is telling us at this point onwards, start looking at the boxes and look for the short side. So boxes are coming, boxes are coming, this is coming, right? Maybe that's why you have to wait for the short break below this. So we got 1 box, 2 box, 3 boxes. They wrap around a bar where the algos are detected. We are looking at bid and ask. That's all there is. If you see a certain imbalance in bid and ask, we plot these boxes. We're detecting the buyers and sellers behind the scenes. All right, so this first bar came, the algo got activated here, correct? Okay, so, but we were already positioning ourselves to take the short side. Now you may not be up and running at 4 o'clock as you show up for business, but professionals do. And there we go, right? Now this is where I said the boxes are great for retest as well. So if you missed this, it confirmed it. If you get lucky, it will retest this again. But if you look at the stop loss, none of them are getting triggered, and you should be able to hold a runner in this scenario. All right, so Sunday open is already there. We already know where they are going to be zoning in by Friday, right? And all the other rotations will happen in the middle, day by day. That's a little bit complicated science, but need a lot of knowledge to get those kind of information. If you're a research scientist like we are, that's what we do for a living, right? So anyways, so this is how you can establish that possibilities of another bias based on the value at price. Why this is most critical oscillator? Most of the big institutions, when they have to track the performance of a given trader, they look at how effectively have they traded based on value at price triggers. All right, I hope it makes sense. Okay, so this is where we are. So going back to just quickly one last one. 8.8. Okay, here we are 8.8, right? So here 8.8, we have oscillators on the contract on 65-minute telling us that hey, we are most likely, see, it takes a while. If they collect the contracts, unless they have enough inventory collected, they will not boom up and down. That's all there is. So this seller is controlling the market right now, and then they came back right in the middle of this. There's a strategy we use to detect that, but here it is. So this, you have to think in the right context what is really going on, right? So we even though we know this is right here is a sell zone, right? Sometimes they, unless they collect a lot of contract, they will not move. Bottom line, that's the whole story, right? It was there to move down. It was, so here it moved on very fast. This is the whole zone of reversal. They collected enough contracts before they crashed it. They moved sideways, collected enough contracts to move. Here they haven't. This is middle of the night, or it's like whatever time it is. Yeah, it is. Sorry, they don't have enough. The news are coming. This is coming. They're just moving sideways. Everybody's waiting on the sidelines, right? They haven't gotten enough contracts yet. Once they do, they move. All right. So this is where I think it becomes tricky also. So you have to use, this is the reason we have to use everything in context, right? You cannot say, okay, hey, this is overbought, oversold. This is not the way it is done. That's why you can see any of the oscillators, they can be overbought for a long time and keep destroying you, and it can be oversold for a long time and keep destroying you. So that's why we have the trend direction. So the trend is down right here. Based on the methodology of this 65-minute chart, as pros know, this trend is down at this point. So now our intention is just to take shorts only. This is where the trend turned up, went up for a few times, pulled back to the levels. Trend went long here again, right? So I think, so this is one extremely valuable insight. Now, as I was mentioning, these boxes show up at all the edges because remember, algos are rotating. You will not be able to catch all the rotation. So what we have to do is first pick the direction, the bias. This is the second part of the level 1 module, right? Second part. First part is you know the direction, you know the levels, you know the bank's bigger C54 levels where they will drive all this, right? You don't know those things because they cannot be published online for free. And if you're interested, you can email us. But we know exactly where they are going to stop. It may get there in a day or two. There's a DNA structure, there's frequency structures, there's a Charlie structures, 54 structures, there's a lot of structures. This is the end state. Once the analysis is done, we are picking the direction. We're going from 4-hour to 4-hour C54. So when we are moving up, right? When we are moving up, this is where when the swings are there, right? The swings are there when it is pulling back towards the direction of the trend. This is where the algo boxes can be used for precise entry. So this pullback happened into this box right here, right? This is it, entry long, but direction is already established. Let it go up. Our direction is only long. That means I'm only going to trade the pullbacks, until I hit my C54 on the other side. Comes down where in the algo boxes. This is a small box, mid-size box, big size box. This is the range to collect your entry. You're trying to become like a human algo by doing this. Okay, and there we go. And then we have another pullback, right? So you got this pullbacks, and once you have a runner, you have a runner. So algos show up on the other side for exit. They are rotating. You will not be able to rotate like the way they do. This is all 80% of the job is done by algos, right? So you just have to follow the methodology. And then just trade in the direction of interest. So let's look at this guy. Okay, let's go back to this guy. We got this. Okay, and now we are looking for, now this is coming on the other side. This is the median, this is the average, and it's going to rotate. So value of price has moved down on this side of the equation. So what I'm looking for some algos to show on the bottom pivot, right? Pivot up, pivot down. So we have this Gann swing which is free in WAVE59. So we put it on because let this box show up first and let it come back to pull you in. And then we are on the other side. The boxes have to show on the bottom side. This is the bottom side where box showed up. Small box is right there, mid-size box is right there, and a big size box is right there. So let this all go. It could have just gone straight, left you alone. But you're doing all this on C54, which is our 4-hour banking levels. The banks will come, market makers will come. We know those things in advance. Weeks, months, 4 hours, 1 hour. We know that in advance, right? That's a part of the methodology. And then what we do, we can also do this end of the box edges, trend line breaks. So I want to go long. Let these two boxes be formed, right? Where we tried here, there's no box at the bottom. Okay, we'll leave it alone. Box shows on the top, box shows on the bottom. Now we are set up again. And then we have a subtle divergence between this value moving up, right? This is reverse divergence. You can see that. Making the same level on the value at price. Price went below it as somebody's holding it. Then they're retesting again, same thing. This time they are retesting it, but this is gaining strength. Oscillator is telling us to go long. Boxes showed up. Now I'm interested. I'm watching this and I'm interested. Now I'm get my first bar. And now idea is to reduce the risk. Idea is to reduce the risk. Risk reduction is the key. If I have to take one shot and take a small stop loss, it's okay, but I'm going for 1 to 10, 1 to 5. I'm not interested in 3, 4, 5, 6 ticks or 4 or 5 points. I'm interested in taking the entire day's move, 30 points. If I take 2 losses also for 3 points, depending on the dynamic height of the box, I'm still okay with that because I am coming off a very large banking C54 level and I have made my direction where I'm going. If I miss that, I wait for a pullback. This is where these things are designed to take care of it, right? So these boxes are looking inside the bid and ask scenarios. Think about that. This is looking for the value at price. How far have you moved off from there? This is looking at 10-in-1 oscillators. This is looking at balance imbalance for the 5 to 8 bars and seeing where the value and where the point of control and offset of that is happening. This is looking at the contract tracking. And this is the zone. When we get to this zone on the top and the bottom is giving us the mental context that which direction we want to go. So if you have made up your mind to go short, this is, let's say this is the 4-hour level on the top. We do this on hourly level first, right? This is what we do in our methodology. So let's assume this is where we are going short, which we did, and we have it something here coming up. It is holding for a reason here because SPX has this. If it breaks, it's going down. We know that. Frequency is holding, so it is holding for a few times. And the sellers are in control. They want to see, buyers are trying hard. They will collapse one way or the other, right? So, all right. So this is where we are on that scenario. So if the bias has gone long yesterday, it went. Okay, we did that. So this is where we are at this moment, and market is flowing towards the short side. And you can just see the value is held below zero line. The pressure is on the downside. One thing is look for the high and lows, but you can see it is not able to even penetrate on the top side above zero. And this is where you can also do something very critical here. This is what we call as pullback. Now you see this beauty of this oscillator, right? This is oversold. This is overbought. This is overbought on the top, oversold in the bottom. But you can see here when this happens, but when you see this one is happening, what is going on? You're getting some pullbacks on this balance imbalance on the top side, right? Short, you can take shorts here, toss it. The shorts are coming here, not a problem. But if you look very closely on this, the value at price is not able to even lift above zero, not even once. In the morning it did when they were resetting the algos. This was a great shot. Now if you missed it, you came to work at 10 o'clock and you want to make a trade, you observe this behavior that we are mostly trading at the lower edge below zero for last so many hours. So your intention should be that, hey, we are not getting any serious buyers coming in at all. Every time it goes to zero, gets smashed. Every time it goes to zero, gets smashed. But we also have what we call as the helper oscillator at the bottom. Even this guy is not able to go to overbought. It is pinning at this level, but these levels are defined inside the code. So this is like, overbought, but this is like a mini overbought. The top, the fat line is overbought. This is mini overbought. And this gets colored, which is telling us the pressure, which side is controlling the pressure. So this side is telling us that the pressure is having trouble. Pressure is being generated, not having trouble. Pressure is having trouble for the buyers, right? Because you're building a huge pressure on the downside. Downside is more aggressive. You can just see that. The rallies are short, big downward move. Rallies on the bullish short, you guys call it a flag pattern, right? You guys are calling it a flag pattern. Doesn't matter, whatever you want to call it. But you see the context, right? The context. What is happening? You have a flag pattern. What is happening value at price? It's not even pinning above zero. What is happening to the oscillator? It's giving us entry to pressure is a little bit released, and there we get a box again, right? At this level, telling us to go short. So it happened twice, right? One thing in the morning, it happened here. You take a shot here. You take a shot here below the box break. You never got stopped out here. Never got stopped out here. You never got stopped out there. And this was the last attempt. Rally, fake news. Again, went back to the way it broke down. Went back there. And look at this. Smash down. This time it got a little bit excited. They're trying to pull people on the wrong side. And this is what happens, right? So these lines are your price lines. You have a precise, we don't chase the price. Okay, we don't chase price. Let this guy set up first. Let it blow. Let it go. If everything is setting up for the short side, you do is a limit orders. Right? Let it go up. It closed there. If I'm taking a shot, I will take a shot here. If I didn't catch it, this is my next level of shot. Look at the oscillator is ready. Right? Now, as you can see, this is a Bollinger Band of the contract rotation. We can see that this is very much collapsed. This volatility is pretty low. So they are just rotating the tops and bottom. They're rotating. They're rotating. Right? They're just rotating. So it may not reach that our extreme zone, and they are mostly doing business on the bottom side, and they're not able to lift up the market at all to this zone, which is qualified like here. Right? When they go to this zone, then we get a little excited about picking up the tops and bottoms. But now you can see this context is telling us, you can see the market in the whole picture. Valued price is not lifting up above zero, last for so many hours. Okay, and look at this oscillator is not able to even go one time. So they're not able to, buyers are trying to come. The buyers are 80% algos, they're rotating. Not a serious buyer is coming. The seller is controlling from the top. They attempted to rally a few times. And so we have to look into our frequency, as we have shown many times, and see where the larger frequencies are. Those frequencies are hitting, right? As we have shown from our levels. Frequency, right? So we already plotted this. I didn't plot it yesterday. It was almost the same level. So you already have this, right? So you should be already making big money for free as well. But you can also track the frequencies. Right, we know how to do that. So 1x of the frequency, you have to have 3 frequencies. A bunch of, you already saw frequencies for free, but there's also DNA behind it. So DNA controls the frequency, frequency controls the value, and then they control the rotation C54. Holistically, you have to see people who are engaged in this course. They are really, really winning every day now. Every day. That's what it is. It took them 4 months to get there, 3 months to get there, right? So now same thing is happening. So always do some channels, trend lines. It doesn't hurt to do channels, trend lines, right? So you get a context because people are doing it. So this is a very narrow channel. It broke. That's fine. Retest it. No problem, right? This is all simple technical analysis, but you can just see what is going on. So you'll get one good trade. Once you're in the trade, you should have a runner, right? So you can, so if you missed it, maybe you want to start your 10 contract run lot trader, start with 2 and see what happens. $1,000 are done, you're good to go. This is 9-point separation, and they dynamically change every day. What next? Right? I know if you're far away, if you are trying to force a trade, maybe you can, instead of going 2 full lots, you just go 2 micro lots. Because you missed the trade here, you can, let's test the water, see what's going on, and you can anticipate it'll come after you. And so these things are designed so you get very precise entry, and you win 18 days out of 22 days. That's the statistical evidence we have for last 10 years, right? All right. So this is what it is. Just wanted to show that value at price and the bottom. Still not able to lift up at all. Just watch that. Thank you very much. I hope this helped to put the context in picture. Now this is part 2, as I said. This is, I'm saying all these things after the level, the analysis which sits on top of this has been done, which we are not discussing in the public domain. That is the real power of, we know exactly what's going on. I just showed you one part of it is frequency, and they just work very well. There's so many other things going on. This is a 9 stacked process analysis which is done professionally in the hedge fund world. Once that big domain analysis is done, we know exactly what we are doing. This is the execution of it. We have a plan, we have a direction, we have the levels. Now we are executing it. Now we are just pressing the buttons, right? This is why we called it level 1 part 2. Thank Thank you so much, and I appreciate all your support. Thank you.